What's going on, guys? It's Edward with Crypto University, and in this video we're going to be talking about the RSI indicator and how you can use it in your trading strategies to be more profitable. So, what is the RSI indicator? Well, the RSI indicator is the relative strength index. You can apply it to your chart on TradingView by pulling up on indicators and strategies, and then you can type in RSI. It will show you the relative strength index. So you can populate it to your chart by pressing it. I already had one filled in. So if you pull up the RSI box first, we'll check the inputs and we'll check the indicator time frame to be the same as the chart. So whatever we put our chart here is what it's going to display the information as. Now the length is where the information is actually being pulled from. So this is the past 14 days time. So if you had it to 14 here, it would take the information from the past 14 days and consolidate it into that range. If you choose a source, you can choose the open, high, low, or close of the candle. Most of the traders use close. If you have some other private script or things like that, you can kind of use them to integrate here, but we'll just go ahead and leave it with closed. Now, if we come back to the style, the RSI will show you the color and what format you have here for your actual display of information. Now, the upper band is right here, and so whenever price hits this region, it can generally be declared overbought, or overpriced, or expensive. Now, the lower band, whenever price gets to this range, can generally be considered oversold, or underpriced, or cheap. And the background is just the background. You can choose that to whatever color you like. I'm just going to leave that there. For the precision, it would show you the decimals over here, so it would just expand on how many decimal places you would see. It's not really going to make that much of a difference for the purpose that we're going to be using it for today. So let's just go ahead and leave it at default. And there we go. Now we're ready to interpret our relative strength index. As I noted earlier, when price came down to the oversold region, price would be considered cheap. So if you take a look at the 1 hourly time frame, this isn't exactly rocket science to figure out here. I mean, I know it can be difficult if you've never done anything like this, but if you just bear with me here, let's take a look at it. So here we can see the relative strength index trends down and is considered cheap, right? So if you were to compare this on the chart at that point in time, you would see that the price was very cheap. If you bought whenever the price went to the bottom of the relative strength index, you actually could have walked away with some money. Buying right here at the bottom of this one would yield you up 3% in the next couple hours, and buying along the next bottom of the RSI, even if you caught the double dip there and bought right here or started earlier from this first dip, you still could have held on for profits until the first retrace, because you never know what's going to happen. So you still could have rolled up for 2.52%. So basically what we're seeing here is, as the price of the RSI trends along the bottom, it would indicate a good buy time, right? And whenever price gets along the top of the channel, would indicate a good sell time. So as you can see here, price is overbought, so it will reverse back down. And then after some sell-offs, it will come back up. After it reaches this point and is overbought, it will again experience some sell-offs all the way back down. So if you just look along this path, you can see that as time moves forward, the pattern stays pretty consistent. If the RSI is low, you can find good buying opportunities, and if the RSI is high, you're more than likely posed to sell. Now, what we have here is some divergence, right? We plotted this out because we were trading this. So after we see this divergence here, which is what we would call this, we can expect a trend reversal. So whenever we're making plays off the RSI, we're looking for this. This line is sloping upwards, and this line is sloping downwards. So this is an area of divergence. RSI divergence is what we would call it, and we can expect price to move the opposite direction after hitting this line. So if we're observing this, and this hasn't happened yet, so this is all we're observing, we can expect price to go back down further after bouncing off of this divergence, in which case it did briefly, and return to an oversold area of price confliction, in which point we saw upward price movements. Whenever the RSI gets overbought, in some scenarios it can continue to trend overbought. So let's just take a look back and try to spot some more divergence here. I'm going to show you a couple more examples, that way you can see it. So if we look back briefly, we can see another area of divergence along the chart. As this line is sloping downwards, this line is sloping upwards. So this is indicative of a trend reversal. And in fact, we do see a trend reversal after that RSI divergence. So now if we'll scroll back just a little bit more, we have another trend reversal on an area of divergence. See, these two lines cover the same distance, except one is sloping upwards and one is sloping downwards. So whenever the RSI gives us this information, we see this here, and price rises higher on the candlestick chart, but RSI falls lower on the relative strength index, then you can expect a trend reversal. So if you look back in your candlestick chart and try to find those areas of divergence along the RSI, that will help you a lot to be more profitable in your trading. When you can find those areas of price trend reversals, will really be beneficiary to you. So as you're looking around on your charts, you just want to find, let's say just for example, pull up on Litecoin. This would be an area of divergence right here. Found one very quickly. As you can see, this is sloping down. Once again, this is sloping up. So as you can see, after our divergence, we have an uptrend, and price adheres to the rules pretty well. Goes down on RSI, goes down in price. Then you can see it come back up, goes down, comes up. So pretty much, if you're looking to trade the RSI indicator, guys, you want to dictate where your buy zone would be. Start to dollar cost average in around that price. Look for other signs like bullish pin bars and where you are in relation to your actual trend line to determine what is a good buy time and what is a good sell time. So right now for Litecoin, we don't know how this is going to play out because we can't see the future, but you should come back and look at this video and see how interesting it was. Because here it looks like we have divergence. This being the case, we can expect price to move downward before it can continue to move upward. So it looks like there's a lot of strong upwards pressure here, but it looks like we're about to break out of this wedge in a negative direction based off of our divergence that we have spotted here. So check back to this video and see how it went for Litecoin. You can see here the date. I hope this video was helpful to you guys and you understand a little bit better how to use the RSI indicator. Feel free to check out some of our other resources at cryptouniversity.com. And until we meet again, guys, I wish you the best of luck in your trades.